Well, good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 3rd of February, 2021, and we're at 4:30 p.m. Central Time. I haven't been this early in a long time, but I have other things I've got to do this evening, and they are involved in work, by the way. I'll be home at my desk here, but got to get them done. So, interesting day. Let's talk the politics of the day. President Biden wants a $1,400 check. He said he made a campaign promise for it. He's not going to give up on it. He's willing to negotiate on who would get it. So instead of it being sort of a helicopter amount of money, they'll narrow that in, or he's willing to. Chuck Schumer and Mitch McConnell in the Senate reached agreement between the House or the Senate Majority Leader and the Senate Minority Leader as to how they're going to handle votes going forward with what's called their gentleman agreement. It avoids these huge fights as long as they both live up to it, and that's been a precedent for it before when the Senate was split. So that is a good thing. I think also a good thing is that there's a lot of pressure coming from the Fed and the Treasury Secretary to give more relief to those that need it and to businesses and so on. So as much as I understand the Republicans want to fight the battle of fiscal restraint, you're hearing from almost every body outside of a political body that what? We need more help. If you saw the report, for those of you that get my written updates, and that's a paid subscription, I do an analysis of the Fed report that came out this afternoon when they do a survey of businesses. There's 10,000 that get involved. I don't know how they pick the 10, but they talk about what COVID has done to them, what it's done to the workers that they have. They have to let people go, where they're at financially, and so on. Very important reading, and it just hones in on this. So something to think about. I personally think that you're going to see some form of a program come out quicker rather than later. Unfortunately, we have the Trump impeachment trial that'll keep senators at bay for a while, but after that, we'll see where things go. This week, we have the all-important jobless numbers. Tomorrow morning, we're going to have, obviously, the unemployment claims. So you want to watch all that. We've been getting PMI numbers and, of course, earnings all the way through. So let's go to our first chart, which is the S&P 500 index. As you can see, this market has stayed over the 18-week moving average of closes, basically back here as we got and approached November. We had one break. We really weren't under it prior to that through the summer. You got over it. So you had that one break and that's it. The bias is up. Let me define bias in the most simplistic way that I teach. When the market is over the 18-week average, be it on a daily chart, a monthly, a chart of closes, a chart of anything, the bias is up. Under it, it's down. Simple, right? Bias is a filter on other indicators. Here's a bar chart, and what did it do? Well, let me show you, because it is fascinating. Let's come over here, and here we are on January 26th. Then we get this event called GME and AMC and costs and all this other social media. Boom, the market goes into a frenzy to the downside, 2.5-point decline. The market then starts bouncing up, half of that falls back and goes down another 2 percentage points. And all of a sudden, we're back on a day like today, and it's like it's a non-event. And that is the noise of GME and all that right in here. Keep that in the back of your mind. You're not seeing these stocks move very much right now. I am not saying they can't. I am saying they have the regulators all over them. Have a great time with that. We in the brokerage industry understand regulation better than most. We are really regulated. I have to be careful what I say. Other brokers do. We have to be careful what we do. We're well trained, well versed in what we can and cannot do. It's really that simple. When you go on the social media, you can say anything. You're not a registered broker typically. And being that, I think the market's going to go where you get 2 million followers for whatever reason that you have, and you create events. Deal with it when the regulators come knocking on your door, because they're there. You may not know it, but they're there. That's how I look at it. And there's nothing wrong with that if you've done nothing wrong. And by the way, I'm not saying anything was wrong. I am saying You're in the world of regulation, whether you like it or not. So when I look at this, we're back in a resistance point. The market, is it trending? Well, in the most simplistic terms, what is a downtrend? Lower highs, lower lows. Yeah, the stepping ladder pattern. And an uptrend, higher highs, higher lows. You don't have that here. You have a higher high and a lower low. That's called no trend. I next look to see, is the market trading under or over the 18-day average? I want to see that bias. The bias is up. So I have a market that has no trend. The bias is up. I had a vertical price decline and a vertical rally back up to where this whole thing began. I look at Bollinger Bands. Why? 95% of the time, the way the algorithm is written, the market will trade within the bands. Can you write the algorithm to go 96%? You sure could. 97%? You sure could. If you hit 100%, the band will never be hit and prices will always trade within it. That is not the goal. The goal, as it's been written by John Bollinger, and it's a fascinating algorithm, is that the band will be hit, and the traders, everybody's got a different take on it. My take on it is the first time you hit the band, upside or downside, you don't need to be at that 96, 97 percentile. The odds are only 5% of the time are you going to stay under it. Why am I hanging around on the majority of my position? Then I look to see, before I make that decision, am I coming out of sideways action or a broad swath of action? Well, vertical declines and rallies are broad swaths. That's simple. This was a big break. That's where I think the pros took money off the table. That's what I teach in my charting course. It's what I believe. Next, I look at momentum. Momentum tells me, am I looking for a market to go up, down, sideways? Is it overbought, oversold, locking into a trend up, or locking into a trend down? There are different personalities to it. This is an overbought personality. I define that any number in the stochastic that gets over 70 is overbought. It's my own interpretation of it. Any number under 30 is oversold. It's an overbought market, not trending, is gone back to the line in the sand, that neutral number hanging around there, hit downside targets. When I come to the NASDAQ, let's take a look at today's action. 136.1380 is the upper Bollinger Band, I believe. You didn't quite get there. You got to 13,584 instead of 13,683. So you're backing off from it, almost to it. No trend, higher high, higher low, overbought condition. So long. Here's a market that could get very interesting. First off, it's in a downtrend. You have a pattern of lower highs, lower lows. You hit your downside objective. You bounced back up to the 18-day average where you already had lower highs. What do I think the pros did? Right here. If they wanted to, this is the number you sell. 30,738, which turns out to be the 18-day average. It also turned out to be the high of the day. I'm not the only one looking at these numbers. From there, if the market continues down, you're looking to get to 30,057. Where's the stop if you're wrong? With today's action, the stop, if I'm wrong in my interpretation, take out 30,738 and I'll change the pattern. I'll suddenly have the potential of higher lows, certainly a higher high. I'll be over the 18-day average. Any close over that number is bullish. I'm suddenly out of the bear, into the bull, looking with stops under that low to see if the market can go higher. That's the thinking that I have. When I come to the Russell, like the other three indices, not a trend. Higher high, lower low, hit the Bollinger Band, the noise of GME, AMC costs, back up to where you were. VIX cash got up here. What are the odds of staying over an upper Bollinger Band? 5% of the time. Did you hear me whisper it? Don't tell your neighbor. 5%. What did it do here? What did it do here? I can go on the chart. You don't become a hero over that number. I have people I know that were buying it. I get calls when silver was exploding over the upper Bollinger Band. Ira, can I get in here? Can I get in here? And I don't know what they think I do. I mean, these are people that I've taught, and they get caught up in the emotion. You don't get caught up in the emotion. What about T-bonds? Okay. So we're here looking at T-bonds. What's that number? That's a Bollinger Band bottom. What do you do with that? You get out. You hit it. What are you supposed to do? Right at it. Lift your shorts. Minimum, a good portion of them. You're oversold, bias down, trend down, you hit an objective. 10-year note, fresh bear news, fresh meat on the table. I think the pros are looking to sell the 18-day average, stops over this high of 137.09 to see if they can get the market lower, not oversold, bias down, momentum down, trend down. In the dollar index, what do you do when you hit the upper Bollinger Band? I know you're not going to believe me, but I'm going to tell you, I think the pros come out. Does that mean they can't take off a chunk, a big chunk, and move stops up? They could, but again, staying over that band's going to be hard. Did you stay over it today? No. You finished out at 91, let's call that 15. The Bollinger Band's 91.17.5. So you're hitting it and riding it and pushing it out. I get it. But you're also overbought. It's certainly not bearish in any manner. Let it keep pushing it. But it's not offering a reason to come in at being overbought against the upper Bollinger Band. The flip-flop's true in the eurocurrency. Now you're down to the lower band. You're oversold. The trend has been down. We've been accurate on that. I've been telling you I think support will come in between the band and the 100-day average. I contend that's it. I am not bullish. That's where I do think the pros are lightening up on the way down, not adding to new shorts. In the British pound, you have a pattern. Actually, this is wrong. This should be pointing down. This is really 137.62. I just noticed it as I'm looking at it. Lower highs, lower lows. I think the pros are selling short now, right here at the 136.61 level. Where's their stop? Well, if you get back over 137.62, you break the pattern of lower high, lower low. Objective, the lower Bollinger Band, wherever it comes in. Momentum down, bias down. Everything looking bearish to me right there. Sorry, I have the wrong arrow. Bitcoin, sort of a strange chart. I'm not quite sure where I've got the highs and lows. We know we have a higher high, but I have a lower low than the swing line low. Don't know what to do with it. And this is darn it, I had changed it. It didn't keep. That's Jan. I apologize. I had changed this chart. I just did an upgrade on the software. It must not have kept it. Darn it. I do apologize. I think I had it right yesterday. Wow. In the Brent versus the April WTI, and yeah, I do software upgrades, and that happens, and I'm all involved in that. We won't talk. In the Brent versus WTI crude, market seems to be comfortable right here with it staying under the 18-day average. Instead of the differential being where the WTI is going to lose to the Brent, it's narrowed in. In other words, the price between the two is getting closer. Look at that up move today. Now, you went up for the first time yesterday to the upper Bollinger Band. As I said then, and I'm going to repeat it, that is where I think the pros took some money off the table. A chunk of it, a big chunk. If they're going to move a stop up, they don't want it under the low today. Tomorrow, I don't think they want to stop under today's low for tomorrow. Doesn't mean it can't go higher. It could be a breakout. Why is it a breakout? Now, remember I told you I'd explain that. My theory is that when you get a market that's over the Bollinger Band and you close at the top quadrant 2 days in a row of higher closes, and those quadrants until you take out the most recent low, you have a breakout to the upside. I treat it differently. As that's occurring, it's after the fact. If I've still got my part on, I'm watching because I'm not expecting a big break in the market now. That's my attitude on it. In WTI, it is the same setup. But unlike the others, I've got a lower low, higher high, and I'm overbought, but still a breakout. You have to get back under yesterday's low to convince me that it's not an upside breakout in the market. In the heating oil, same thing. Upside breakout, uptrend, trying to embed. Now, it's the first stage. Today, both numbers were over 80, not the day before, just overbought. Same theory, though, that it's overbought there. And in the nat gas, pulling back a little bit. Tomorrow we'll get what the build is according to the EIA on the stocks. We got cold weather coming in. I know on Friday, from Friday for a week in Chicago, a week. I don't think we're due to get over 17 as a high, and we are going to go to 8 and 10 below, they're saying. So that's going to move east You know that. So be careful, because you're going to get demand off of that. So this market on this pullback, you're probably going to see some interested people coming in somewhere between this 100-day average to the 18, looking to play for that weather. It is a weather market at this time of the year. I want to remind you, I'm normally located in our offices in the Board of Trade, but with COVID, I haven't been in there since March. We're all working from home, but we work in a unique way. It's still with the Zoom and all, everybody's communicating just the way they do. Our personnel at Linn Associates, you're talking seasoned traders. Some guys have 50 experience, more than me, by the way. I'm 52 years in it. There are guys older, and there are a lot of young tigers that we have, and they write about all these markets, but all day you're getting reports, graphs about them, what they're seeing, what the option traders are doing, the volatility plays that are there. If this is something you might want, we'd like to put it in your hand for a couple of weeks for you to see, hey, is it worth dealing with us? No money involved. Just give us a call, 866-973-2077. Go to our website, www.iraepstein.com. Under the word research, it's there. I got a bad finger today. It hit that. I'm sorry. You have a good day. I'll see you tomorrow.